Hey, good morning, everybody. Welcome to Monday, September 21st, and welcome to the last full week of trading for this month and this quarter. Now, we have a little bit next week, about a half of next week. We'll still be in September, but this is the last full week of trading. So, hey, we do have a few economic numbers, I think, coming out today. The markets are not looking well today after closing down on Friday. Also, Dave and I will talk about that. Maybe some reasons why, what may be causing some of this, as some of the things that happened on Friday are kind of brewing over to Monday. So hang with us as we get ready to talk about what's happening this week in the markets.
5.7 Light FM. That's Carlos David Santana there. And morning, Dave. It's now 8:38. That's 22 before 9. Time to check in and see how your money's starting out the week on Wall Street. Last week, at the end of the week, it was definitely not pretty. Let's let it sit at that for a second while we introduce Phillip Statler from the offices of Statler Financial Services in downtown Sebring. Phillip, not pretty would probably be the charitable way to put it at the end of the week, wouldn't it?
Yeah, I would agree, Dave. It has been a rough 3 weeks in the marketplace, seeing declines the last 3 weeks. And today doesn't seem to be getting any better as we look at the indexes.
Yeah, it sure doesn't look like we're turning the corner any. To set the table, on Friday, Dow was down by 244 points. That's 0.88%. NASDAQ down by over a full percent, down 117. S&P was down the most of all, down 1.12%, down a little under 38 points. A lot of the jitters are coming from two fronts. One of them I knew something about. The other you kind of educated me about before we went on the air. They're having kind of the beginnings of a second wave in Europe of the COVID bug. And that means they're starting to shut Europe down partially again, putting a whole bunch of travel plans and other upset on the front burner again. That's scaring stocks over in Europe. I'm seeing their indexes down by 2 and 3 and 4% this morning. But we also have some misbehaving financial entities, don't we?
We do. We, some of the banks are getting caught up in this thing where there's been some suspicious transactions at the international banks in terms of some illicit money being transacted, and not just recently. This goes back some, I think it said 20 years, if not more. And so that is having a big effect on HSBC, Deutsche Bank. And then here in the United States, J.P. Morgan is also exposed, as well as Bank of New York Mellon Corporation. So the banking industry is seeing some fallout because of that. And I don't know, they haven't gotten to the bottom of it yet. That's just what's starting to float out now from this international consortium of investigative journalists that have started leaking some of this stuff out. So going to be interesting to see what happens. HSBC is actually the lowest stock price it's seen since 1995.
Holy crud. The thing that really caught my eye when you said it dates back up to like 20 years, that gets us even back before the 08-09 crash that was triggered by kind of flaky financial treatment of the real estate funded funds and all of that. So, yeah, this might have some implications going back structurally quite a ways, doesn't it?
Yeah, that definitely seems to be the case. So that's kind of the number one headline that's affecting the financials out there right now. But you add on top of that, Dave, the Supreme Court Justice Ruth Bader Ginsburg passed away on Friday. And so that's playing into the whole election fear. Because there is a thought that ultimately this election is going to end up on the desk of the Supreme Court to kind of walk through. So that's an issue. The virus fears, like you said a minute ago, are continue to be an issue. And then you've got treasuries just really taking a dive too.
Everything being relative, our treasury bills are almost in free fall. I'm showing the 30-year treasury notes down 3 more basis points this morning down to 1.4%. 3 points down on the 10-year bonds. They're down to 0.65%. Look at that 30-year note, Phillip, 1.4%. That was the kind of numbers we were getting out of 3-month Treasury bills just a few years ago.
Yeah, it was. And, man, if they keep going down at the rate they're going, I got to think it's got to help the refinance mortgage market here pretty soon. I mean, I think I've seen, I've actually talked to clients that said they're refinancing at 2.25%. And that's getting down there to rates I don't know that you and I've ever seen.
Yeah, my folks were absolutely astounded when I actually got a note for I think 5% at the time back in South Dakota, and they were saying they were at 5.5 back in the 60s. That's just these current interest rates are absolutely astounding. We could really use some good news domestically, and we didn't get any this morning. I just saw it go across my ticker. The Chicago Federal Reserve's index, one of those Federal Reserve districts putting out their business activity index, 2.54 was the number last month, down to 0.79 this month. Positive, but still falling. I mean, this V-shaped recovery just ain't happening the way they thought it was going to, is it?
No, it's not, and I think that's going to continue to be an issue. On Friday we did not have the one of the numbers. I think it was the Michigan sentiment number, and it actually came in better than expected. Leading indicators missed by just a little bit. So, I think that last week we saw some initial things in terms of technicals that were putting pressure. And I think that's going to continue to be the thing this week because the S&P 500 now has dropped below the 50-day moving average. And that is a huge technical number that the technical guys take a look at.
Yeah, a whole lot of chart geeks watch that and put sell orders in upon that when it falls below a 50-day moving average. Getting into individual stocks, we got a little fun and games watching TikTok, Oracle, and Walmart. I'd forgotten Walmart was in the mix with buying that social media network. What's going on there?
So, the whole deal with TikTok, the new TikTok Global, right, is a U.S. entity. Because they're kicking TikTok, China, I guess you'd say, out of here. And so it had to have some U.S. Participation. And so Oracle is going to get 12.5%, or they're buying in 12.5% of this new entity, as well as Walmart getting 7.5%. So 20% will be held by those two companies. The rest of it will be held by the owner of TikTok. But it'll be based here in the United States. So that's helping Oracle and Walmart this morning get some bumps. The other thing, Dave, that's helping Walmart is they're going to start, I'm not sure how this will end up for them, but they're going to start their own private label clothing line. Yeah, hoping to take some market share that JCPenney's had that's going to fall out. And take some market share from Kohl's and Macy's. So have to see how that works out. But I got to think that's helping Walmart a little bit this morning too.
I believe that's a little bit of the Costco mentality. You can't get it from a third party at the price you like. Make it yourself.
I think that's probably true. And think about it. It won't only help Walmart, but it'll help Sam's Club too.
Absolutely. Not bad at all. What's going to affect us this week? I'm looking at the calendar. We're into that doldrum week in terms of economic news. Is there anything that's likely to be a market mover this week? I mean, we're coming up on the end of the month, but that's not going to be until next week. So unemployment really isn't going to move us all that much. The routine report's on Thursday, but it's going to be a relatively quiet week, and we could use some good news out of somewhere.
Yeah, it would. I wish I could find some somewhere. There's the only thing I really see for tomorrow, and it'll be after you and I talk. We get existing home sales. It comes out at 10 o'clock tomorrow. Wednesday, the only thing you have is crude oil inventory at about 10:30. Thursday, you have the normal initial claims, which will be the only thing when you and I get here. But at 10 o'clock, you got new home sales coming out. So real estate's going to be a big deal this week. And then on Friday, you got durable goods. So really and truly, just not much out there in the way of economic news. And I was kind of cruising to see if there happens to be any earnings, because There's about 125 or 150 companies still reporting. And we've got AutoZone comes out this week. That's that one may give us some. Oh, we got KB Homes coming out this week.
That could move the needle a little bit.
You have Nike coming out this week. So we do have some big names left. Stitch Fix comes out this week. So that's Tuesday, which most of that will be after the market. So we do have a few companies still of significance to report.
All righty. At least we'll get some trends out of some household names as the world goes on today. We're not looking at anything really market moving so far this morning. Like I said, that Chicago Fed report was not good news. It actually showed a decline from month to month down the line, resetting the table, down day on Friday. We've got the bond rates going weird. That would normally mean that we probably aren't looking happily on the equities side because they're buying more bonds. The money's going out of equities. Am I guessing right 45 minutes early?
That would definitely be right. So let's start out with the VIX. We don't usually talk about the VIX. The S&P 500, that's the market volatility index. It's up 5% this morning. If that gives you any indication of what I'm fixing to tell you. So everything is down. Let's start with the Dow 30. It's down 2.3%. That's almost $650 to open. We've got the S&P 500 down almost 2%. That's almost $65. And the NASDAQ's the best of the bunch, down 1.66%, about $182. So everything is drastically in the red. Let me just say that commodities are not helping us any at all today. Silver's down 3.5%, and gold is down almost 2% this morning. Which is kind of weird that those two are going the same way as the stock indexes. Crude oil down 2.6%, still above 40 at $40.23 a barrel right now.
And that sounds familiar, like about where we were at on Friday morning, doesn't it?
Yes, that is pretty close. Yes, sir.
In that general range, anyway. Overseas markets, I mentioned, Europe is in a major sellout. Both British and German markets are down over 3% halfway through their day. Hong Kong was off by about 2%, but Japan managed to eke out a slight gain this morning when they closed early this morning. You talked about the VIX. That's the Fear and Greed Index, and it certainly gives you an idea that some investors are afraid. If you're getting close to retirement, you ought to be afraid if you don't know how much risk there is in your portfolio. How do I find you to find out how much there is, Phillip?
Dave, you're so right. It is, I mean, this last 3 weeks has really and truly given us an indication of how much volatility is still there in the marketplace. And if you're getting close to retirement, what is close? 10 years. If you're 10 years out from retirement, you're close. And you need to know exactly how much risk you have in your current portfolio. To do that, give us a call. Let us walk you through our financial x-ray to x-ray your portfolio to determine how much risk is there. Give us a call, 863-382-0037. Follow us on Facebook, Statler Financial Services. Like us there. You'll get an update every day from Dave and I. And then this weekend, catch the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
I really hate to sound like we scare people every morning, but when you see 600-point swings in the Dow before the market even opens, that is enough to make a person nervous, isn't it?
It really is. It's man, especially on a Monday morning, you wake up and see that, and it's scary times.
Absolutely. Phillip, thank you so much. We'll hope for a leveling effect today, and I'll see you tomorrow morning, all right?
All right, man. You have a great day.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Wait and
Folks, again, I want to thank you for joining me today. I hope your weekend was better than what the market's starting out today. The other thing is, I want to remind you, if you're getting close to retirement, that's 10 years out or more or less out from retirement, you really need to know exactly how much risk you're taking, especially if we see this thing continue to go down. Give me a call. Let me help you make sure that the risk you have in your portfolio matches up with the risk that you can stomach. Give me a call at 863-382-0037 or go to my website, statlerfinancial.com, and click the schedule and appointment time there. Hey, take care. I look forward to speaking to you again tomorrow.